Welcome back to the channel. Today we're going to look at the latest data for the Bay Area real estate market for the month ending January 2023. Here in a nutshell is the summary, and it's good news if you are a buyer. Prices are down, or maybe I should say continues to go down. The one loan metric that is up is days on the market, meaning how long is it taking for properties to sell or go pending. Pretty much everything is pointing downwards. By how much? Well, let's find out now. Also, again, stick around till the end and I'll show you what to expect in the next couple of months in our real estate market. Let's start with Alameda County. This is for all types of properties. As I have mentioned, days on the market is up from 12 days to 29 days. This number is neither good or bad at this point, and I'll explain during the course of the video why. Moving on to inventory, we are down almost 30% from last year. This is definitely not good, and this is where a lot of confusion comes in. Sometimes you see on the news that an inventory is piling up, but when you compare it to last year, it's actually down. The reason is the days on the market is taking longer. This is one of the reasons why that 12 days to 29 days on the market is not really bad, because whatever you put out there, technically they're still selling. The number of sold transactions is also down big, 34%. And three factors that are driving this number down: one is inventory, two is price, and three, the most important, is mortgage rates. Median selling price in Alameda County is down 8.5% from last year. It's now under $1 million, $915,000. What a bargain. Here are two data points that I don't normally share because in the prior months, I didn't believe it was that important. The average listing price and the list to sell price ratio. The average listing price is down 1.4%. Not big, but you can see that the sellers are starting to adjust down. The list to sell ratio is also down. Last year, sellers were getting on average almost 10% more for their property when they listed. This year, they're getting a little bit under that. This is why also I said earlier that the days on the market going up is not a big deal. Because if you list a home for $1 million, in 29 days on average, you get slightly below that, or close to your asking price. I mean, provided that you priced it correctly, obviously. I know this is an oversimplification and obviously an average. Like I always say, every market or neighborhood is different. So be careful when you're looking at these numbers. These are more of a guide and a starting point to get an idea of what is happening in the broader market. Let's take a look at the numbers for Contra Costa County. It's practically the same thing. Days on the market, more than double. Big decline in selling price. But again, we see on the list to sell price ratio, sellers are still getting 99% of their asking price. Moving on to Marin County. Marin had the biggest decline in median selling price, almost 17%. The number of new inventory and sold transactions are both down big, close to 50%. The average listing price is up close to 4%. This tells me that there are still a lot of sellers that are overpricing their homes when it comes to selling. And it shows on the list to sell price ratio. On average, sellers are getting around 96% of their asking price. So they are overpricing it and they are getting less than their asking price. Next, let's take a look at San Francisco County. Inventory and transactions are down. Median selling price down almost 4%. Days on the market also up. Their average list price is slightly down. Their list to sell ratio is right around 100%. So when the property is priced right, you get your asking price. And I can tell you that from my own client's experience, we listed their property at the right price. The first buyer backed out and 2 days later, we had a better offer. If the market was really bad, the property should still be sitting right now and we may be needing to lower our price. But like I said, it's just taking longer to sell if you're pricing the property right. Here are the numbers for San Mateo County. Median selling price in San Mateo County is down 11%, from 1.5 to only 1.3. Again, that's a bargain. Their list price is up almost 5%, and their list to sell price ratio is at 98.5%. So there's still some overpriced homes in San Mateo County. Here are the numbers for Santa Clara County. Inventory and transactions are down. Median selling price is down slightly, 3.2%. Days on the market is up. Average listing price is up almost 10%, and the list to sell price ratio is at 99%. I wonder how all the layoffs will affect Santa Clara County in the coming months. Let's look at Napa County. The number I want to point out here is their average list price. It's down almost 11%, and they are still selling almost 5% their asking price, still overpriced. Next, Sonoma County. nothing earth-shattering here or surprising. The median selling price is only down 1%, which is the lowest of all the counties. And finally, Solano County. Take a look at the numbers. Again, nothing earth-shattering, declines across the board. So what do we make of these numbers? Well, to me, it really is different from what you hear on the news. Most of the time, when you watch or read the news, it seems like everything is going down. The reality is that it's not going down drastically. Marin had the biggest decline in price at almost 17%, which happens to be one of the most expensive county in the US. And that's where we will see in the coming months where a lot of prices are coming down. The most expensive places around the country or around the Bay Area. And primarily because a lot of high price homes are, there's less and less sales going on at that price range. So this is what most likely is going to happen in the next couple of months. We will continue to see home prices come down when we compare it to last year. Because if you remember, in the beginning of 2022, mortgage rates started climbing back up. What happened was that everybody that was thinking of buying kind of panicked, and we had a frenzy of activity during the first quarter of 2022 all the way to the second quarter. That drove prices up and also the number of transactions. And I would even argue that if we had more inventory, the number of transactions could easily have been doubled last year. Now, even though prices are coming down, we are seeing so much slowdown because the mortgage rates have gone up so much that it's still more expensive than last year. In fact, when you take the Bay Area median sales price from November to December of 2022, it's dropped by almost 12%. However, that drop in price is negated by higher mortgage rates. It's actually more expensive on a monthly basis because of that. Now, here's the thing about mortgage rate though. Take a look at this chart that I have here. Mortgage rates are trending downward. And if you look at the peak of over 7%, we are down a full 1% from that peak. I think consumers or home buyers are starting to get through that initial shock of mortgage rate just spiking up. I think there's starting to be a realization that this is what our new normal will be. And when we hit mortgage rates below 6%, I'd argue that we start to see a pickup in activity. Certainly not like what we saw in the past 2 years, but more of a return to normal, if you will. Right now, we are at this light green shaded area that I have here on this graph. We are in a good buyer demand, and I'm confident that we are headed into a strong demand once we hit, like I said, the 5% range. If you are a buyer and you're waiting for a huge price correction, it most likely won't happen because, as I have shared with this Bay Area market update, inventory is down severely. This is not just in the Bay Area, but all over. When forecasters were looking at this, they were saying that, or projecting that inventory was going to be higher than previous years. But this is actually what happened. Inventory actually plummeted. And so now we are starting to see signs or indicators that we could have already bottomed in home prices because we don't have anything to sell. Inventory is certainly climbing, but way below pre-pandemic levels. The 4 years before all this craziness happened were considered the normal years in real estate. So we have inventory increasing from 2020 and 2021, but way below our so-called normal years. And I think that what we have right now, these new inventory levels, this will be our new normal unless we get an influx of homes for sale. And that may mean more new construction. And here in the Bay Area, these new construction homes are happening, but not to the extent that we meet demand. And also, these are all market price homes. They're not giving them away. Let me end this video with these following graphs, kind of to emphasize that we might see a busy spring and summer selling season, and also where the dichotomy lies. Quite different from what people were expecting or maybe hoping for. At the beginning of January, Goldman Sachs forecasted that they see home prices going down nationwide by 6%. At the end of January, they revised that to only 2.6%. I think we see more of these revisions coming in the next couple of weeks. As you can see from this chart, month-over-month values seem to have bottomed out. However, a recent NerdWallet survey said that 67% of Americans believe that a housing market crash is imminent in the next 3 years. So who's right? Well, it's always going to come down to supply and demand. Bottom line, we still don't have enough supply to meet demand. So what could happen is that if really we don't have any more supply coming in, we see prices going to start coming back up again. I mean, not to the extent of what we had before, but for sure, slowly but surely. Hey, my name is Mac Rogers. If you haven't done so already, please share, subscribe, and like. Also, if you're thinking of buying or selling, give us a call, a text, or an email. Subscribe to the channel, and next week, I'm going to have my monthly market report wherein we cover the whole what's going on nationally. Thanks for watching.